U.S.-China trade drama, Brexit being a bloody mess. What does this mean for your portfolio? Well, lucky day. We have Stephen Guilfoyle here of Sarge 986 to tell us the news. Hello, Stephen.
Hello, Vazaruski.
Vazaruski, Stephen, I bet our viewers are going to be so happy to see you on the show. Thank you so much for taking time out of your day to come on.
The pleasure's all mine.
All right, so as I previously stated, U.S.-China trade relations, Brexit, these are factors that the World Bank and the IMF mentioned that are big concerns to impede global growth. Which of these is a bigger factor, or maybe they didn't mention something?
Well, for us, Chinese trade deal is a lot bigger than Brexit. But Brexit's still important because we're watching dollar valuations. That matters, as we see here on Tuesday. The dollar's finally taking a little bit of a breather, but it's not enough of a breather. We need a lot of help from a weaker dollar, and a softer Fed really isn't getting us there.
So when I say muted inflation, easy monetary policy, what do you say to that?
I say that while you need to be above normal levels in cash because you don't know, and GDP growth for the first quarter is looking kind of awful. In fact, we're within the margin of error. We could have a negative print. You need to be almost a little bit aggressive on the part of your portfolio that you do put into equities, because there's the chance that we can go into a TINA period. I don't know if you remember what TINA is. There is no alternative. As the Fed decides, because looking out a year, there are no rate hikes on the anywhere in the immediate or medium-term future. They just can't go there. So if they either stay the same or cut, then it leaves it to equities again to carry the financial world. So you're going to probably see an increase in multiples from the current 16 times for the S&P 500 to maybe 18 and a half, which means even if it's the wrong thing to do fundamentally, you need to be long equities.
Okay, hold up. Before we get to your portfolio picks, is the Fed checking out China? And is it that bad over there, given that M1 supply is stabilizing, investment and credit growth is seemingly okay over there?
A lot depends for the Chinese economy, on not just stabilization, but actual growth. Okay, now if it trends down towards 6 to 6.5, a lot of people think that really translates to 2.5 here. They don't really trust the data. They also will rely on fiscal stimulus, which we've seen from the Chinese many times. Actually, we're guilty of it ourselves now. As we've seen with the president's budget, just trying to maybe push the envelope a little bit, though we do need defense budget spending, and I won't get into that now because that's a half-hour conversation. But China needs a lot of help right now, maybe even more than the United States does. And I think you want to. ZTO is tonight. There's your play for this segment of our show. Okay, ZTO is a transportation company, kind of like DHL or Federal Express, based in Shanghai, $15 billion company. I am long the name. This is a name that the retail investor could invest in based on a potential trade deal that helps the Chinese economy.
What are your other portfolio picks and ones that you want to take out?
I have so many stocks in my portfolio. I'll give you the recent thing. I shorted Netflix this morning based on the coming competition that we'll see from Apple, from Disney, from AT&T, from Amazon. I have positions in all these names, by the way, in full disclosure. But Netflix is my most recent, and that was a short from the short side this morning. I shorted it around 360 in the pre-opening. I've been waiting for a chance to get short this name again because I lost some money on a short earlier in the year. I'm not trying to sound like I do everything correctly. But I don't like Netflix's prospects in terms of margin moving forward. I think they're going to have to pay too much for content. I think the best name in the group is going to be Disney, but I think you want to be long Apple also. Apple also has a big event coming up on the 25th, which is going to be based on really subscription services, which Zora gang. See, that's my other portfolio pick.
Yeah, they're up to their own content as well.
Yeah, so that's basically what I'm thinking there. Do you want to go into Boeing? Do you want to do that?
To be honest, I am curious to see what your thoughts are on Boeing.
Okay. While ETF flows will probably be Boeing's obviously a negative, okay? It's an unknown. A lot is being priced out right now. It's going to drag a lot of stocks with it that don't deserve to be punished, all right? So this is your chance to buy maybe a Lockheed, to buy a Raytheon, to buy a Delta Airlines, because it's the one that isn't yet exposed to the 737 MAX 8 aircraft, like Southwest Air is exposed, American Airlines is exposed, and I think United Airlines also exposed.
What do you think about that big buy yesterday in the stock?
Late in the day, you mean?
Yeah, that was kind of surprising.
It was surprising. I think it might have started with a short cover. And I think that maybe the algorithms took over from there, thinking everything was maybe going to be A-OK. But as we see today, everything is not A-OK. A lot a lot of airlines. Chris Versace, ladies and gentlemen.
Stop. Are you serious? Look at that. He always gets too much attention. Look at this. A guest appearance from one of our favorites, Chris Versace.
I couldn't keep a straight
Next.
face.
So, Stephen, all in all, right? Stocks are mixed today. I like my drinks mixed, and not my stocks, so that's what we're seeing. People are deeming this a rally. Do you deem it a corrective rally?
Very tough to say. I will admit to being unsure about whether we're still in a bear market from December or a bull market from 10 years ago. That's why I have professed on keeping high cash levels, why I've professed on being somewhat aggressive with the equity portion of a portfolio. I think we have to see what happens when the S&P 500 gets back to 2815. That level has stopped traders cold 5 or 6 times now.
Yeah.
All right, that is the spot. We need not only to pierce that spot, we need to test it. There needs to be a sell-off after we get past it, and we need to see it bounce there. That's when we'll know.
So we need to back test.
We need to back test and bounce.
Back test and bounce. All right, so you're putting cash aside, waiting for more opportunities after that.
Actually, cash, I'm down to about 33% cash. I've been as high as 48%. I have been above 30% cash for 14 months now. So I have been above my normal cash allocation for quite some time, which is how you tamp down volatility in a portfolio.
Well, Stephen, thank you so much for those words of wisdom. Our friends and family and viewers are going to be so happy to see the Sarge on the show. And Stephen, I hope to see you soon.
I hope so.